You know, but it's also good to be able to do yourself, because sometimes what if we don't have signal? So what will happen?
Yeah.
You understand? Because sometimes I used to wake up so early just to be able to make the signals work according to our time frame. Adenike, you know now.
But there'll be no signals.
Yeah, you know how the thing used to happen
Now.
we'll go and check the sheet and do, and then we are not able to trade because nothing matches.
Yeah.
So I was now looking at it, and I started using this ADX.
Yeah.
This ADX, my husband and I, we actually watched ADX on our WOW. You understand? ADX, and then we like MACD so much too, so we combine both of them. And then of course there are some other YouTube videos and all that we connected with it for our education. And recently we added of course we've been using EMA, but I really didn't pay much attention to it. So what I'm doing is a combination of these three right now.
Okay.
You understand? So I go through each currency pair, you know.
You can share your screen and then show us.
That's what I want to say. If it's possible,
okay, yeah,
to just share the screen. Yeah, so that we can see. Thank you.
I don't even have let me put on my I'm trading on that computer my husband is using, so
okay. Except you log in there.
Yeah, so but let me just quickly put on a chat. The patient.
You can open my trading view from there too.
Yes, that's what I want to do.
David.
You are improving, you are increasing the traders in the house.
Yeah, so we thank God.
Oh my God.
So I believe that everyone should have his or her strategy, really. You understand? Because there are certain things that will work for me, that may not work for somebody else.
No. The thing is this: if you learn the strategy well, and we all learn it well, it works for us.
Of course, I understand.
The thing is this: I understand what you're saying, right? So I feel very comfortable and very relaxed with the Three Sisters, ADX, and MACD. Combined with when I combine it with the price action, I'm on top. Nothing touches me, understand? I'm not scared. I can enter the market confidently and come out confidently without being afraid. And when I put my trade there, even if it's going down, even if it's doing a pullback a little bit, I'm not scared. I'm not moved. Like today, I did something crazy, right? What happened was that I traded my indices, right? That was yesterday night, and I made like crazy. In fact, it was crazy yesterday night. Between the time I closed from work, I got home, just 20 minutes, 30 minutes, I made ×3 of what I made throughout the day, understand? Which is amazing, all right? So I left the trade that way because I didn't trade any other thing. I'm more than my target. I said no more trading. I just relaxed and went to bed, played with my children, talked with my wife, and relaxed and did other things, understand? So today I wanted to trade a pair, right? That was GBP JPY, right? I was going to enter a sell, so I hit it without changing the lot size. Indices lot sizes are huger. That was the same thing that happened to you, Tina. When
I lost my career.
Entered, it was huge. Immediately I opened, I was seeing.
God help us.
I was seeing the spread was $80, $90.
Oh my God.
Okay.
So I said, no. My analysis was on spot. I said, no problem. I waited. The thing went very high, but came down again, and I collected huge profits, understand?
Ah, okay, great.
Accumulated huge
That
profit.
is
So,
positive.
so with that, you know, you do your analysis and you see it panning out and it's going your way. Of course, you can afford to increase your lot size a bit so you can actually, you know, collect profits faster, but you have to be sure. You have to be sure that your analysis is spot on, you understand? Don't do that now. Don't try this at home until you are confident, you understand? You know? You are muted.
We can't hear you, Esther.
Yeah, she's muted.
You know this EMA thing that she was saying that she's been adding it to ADX and DXI. You know that was what I did today as well.
Did it work for you?
I used it for gold, and you know I used it yesterday and today. And today, out of 9 trades, I lost only 1.
You muted yourself now. I didn't mute you. Okay, let me ask you to unmute. Okay, so you can. All right. You're open now.
Okay, thank you. So what I actually started with was just the ADX on Friday. I know Friday was a day we shouldn't have traded actually, if we remember.
Yeah.
That Friday was
non-farm payroll.
Non-farm, yeah. So we were not supposed to trade that day, but I said, okay, let me take this day as the beginning of my test, you know.
Okay.
So I started with ADX. I started with the ADX and MACD. That's what I started with actually on that Friday. So like we know now, my husband just explained the ADX. So what I do is, of course, when they cross like this, I hope you guys are seeing my
we are seeing.
Yeah. So like, of course, one thing is that when you're trading, it's good to see it in retrospect like this. Now you say, okay, I did this, or I should have done this.
I should have done that, yeah.
Exactly. So let's say the trade is going on now, and you know, let's say we are here now. I see that there's a crossing, right?
Yeah.
And you know, to be on the safe side, what I do normally is that, of course, there should be a crossing. And since the D minus is above the D plus, of course, we know that
that's a sell.
That is a sell, you know. But another thing I look at for is the strength of the trend. You understand? Though now this is a bearish trend, I'll now say, okay, how strong is it? I actually started with 20. You understand? Yeah, my line here is 25 now because I'm improving every day. You know, I started with 20. There's nothing wrong with 20, but I just feel that 25 is safer. And I've actually listened to quite a number of lessons or lectures that say 25. So I make sure that the trend is strong. Maybe I might not directly take this trade until I see that the trend is above 25, like here, right? Or here, something like that.
Okay.
Yeah, and as you can see, this MACD also is bearish, right? Because forget about the right-hand side of this chart. Let's look at the left-hand side because
we don't know what's happening there. Yes.
Exactly. We don't know how the thing is going to progress. So of course I enter this trade and I actually right now I'm taking 10 pips.
Okay.
You understand? Because I'm still a JJC. You know?
What do you put your stop loss at?
My stop loss actually, when I started, you know, I was putting my stop loss at 50.
Okay.
Yeah. So so those were the two I was using until, and I now noticed I tried to do a little crypto trading over the weekend, you know, with the same method, you know. So, but I actually noticed that when you look at the Three Sisters or EMAs, You know, we're using just two of them, but with some training and all that we looked at, we now decided, okay, 3 is the best. You understand? So now what I'm doing is matching the EMA. As you can see, the EMA actually tells me the trend. You understand? If I were a more experienced trader, right? I know that if I were to leave this my trade, maybe I take the trade here, I follow the EMA until, you know, until the EMA, sorry, with a combination of the ADX. Maybe as the ADX is here now, you see that as the ADX is here, maybe I would leave this trade because I know it's a consolidation.
How do you mean? No, sorry.
First of all, the trend is low, is below.
Almost
The strength of the trend is below.
It's below 25. Okay.
Yes, it's below 25. And just like Jeff said, if the ADX line, which is the purple line or the very blue line, is crossing both of them, like the D plus and D minus, just crossing them, that's one way you know that it's a consolidation. And I also noticed that when it's under, it's most times it's consolidation, and you can see that it's consolidating here. Yeah. Most likely I would have left this trade before, when this thing is crossing.
When it's going back down.
Yes. But if I were, but later on, I'm thinking of actually, of course, with time, I tried one today to do key levels in addition, and it's panning out, you know. So now small, I did one.
That's way to go. You see, we talked about the key levels the other time, you understand? Because the thing is, if I were the one in this trade, right? Of course, I see what you're saying is very true, because the ADX strength line went down below 25, all right? And then you see the D plus D minus trying to go in and out each other. And then the price action is still doing the same thing as well, you know, not moving anywhere, just moving sideways. But if you look at the three sisters, understand, they are still separate from one another. But the only difference at this point now is that the bullish and the bearish sisters are closer together, all right? But the third sister is still trying to tell you that this trend will continue by being far away. But you cannot go with only what the third sister is saying, all right? You have to make sure that the three sisters are in alignment before you can actually use them and use them successfully. So getting out of the trade at that point would have been a very good idea. But by the time you see further separation in three sisters and a strengthening in the ADX line and the D minus line popping up below 25, leaving the D plus line below, and your MACD also showing a bearish movement, you jump back in again. You would have read the thing again and then gone down there. You see, the thing is, the trend is your friend, all right? But of course, Javed used to say that the trend is your friend until it hits the end of the bend, you understand? You know? So, of course, it hasn't hit the end of the bend. It is like, alliteration or using words to play, right? But it makes proper sense. The trend is your friend, all right? Until the end of the bend, all right? When it hits the end of the bend, that means it's going to reverse and it's turning around. So when it turns around, it's no longer your friend, you jump out. So you see, these are the things you try and remember to, you know, kind of put into your trading and make your trading. You see, trading is actually fun, understand? This is fun. Trading is fun. You get to that point that trading is fun, you're loving it, understand? And at that point, you're not scared. That's the point, that's your threshold for making money in trading, understand? You need to see trading as something you enjoy, something you look forward to, something that, you know, makes you happy, you understand? And then, of course, it takes time to get there. I didn't get here just because we joined Epic. I started trading long before Epic, right? When I came to Epic, you know, it became a little bit more stable and more stable. And now I don't see myself just as a stable trader anymore. I see myself as a profitable trader, and thank God for that, understand? So it's not rocket science. It's easy. You just have to open your mind and accept that it's easy. You understand? That's the first mindset, you understand, you have to acquire. You see, until I got to that point that I told myself, Emmanuel, you got this. Emmanuel, you can do this, you understand? You know, and then I started trying on my own and started relying on myself a little bit more. Of course, you might stumble and fall. That's why you need to start with demo, all right? And that's why what Esther is doing now is not so bad. She is doing demo, but I think she's over flogging the horse. That's my opinion, understand? You know, so
Okay.
no.
Anyway, should I continue?
Yeah,
Yes, please.
So like this trade now, like if I see this, I see that the trend is above
25.
25. That's the ADX is above 25. And I already see that EMA is panning out, and then the MACD is telling me the same thing. You know, today around 2, 3, 4. In fact, the market really went crazy. The volatility was so much that as I was seeing a lot of things to trade on, I couldn't even choose. There were just too many, you understand? All I do is just come to the market, click on AUD, USD, see how the movement is going. Yeah, should I enter? Maybe it doesn't really, like this thing now, this trade now, where this line, this my vertical line is, everything kind of pans out. I'm using this candle actually, this red candle. But of course, I enter this trade, this blue candle is going to come up and maybe I have a little drawback. You understand? But I will not be worried because the MACD is telling me that it's still is bearish, yes. The ADX is telling me is a very good sell. And EMA is telling me is a very good sell. To be on the safe side, if you want to try it, you can start, of course, with demo and use our 10 pips method. You understand? But right now, if I know that this trade is very sweet and I know it's going to pan out, maybe I can open 2. I'm not advising that for a start, you know, because you have to like check.
Or maybe catch 10 at a time, 10 and then go back in.
Yes, you can do that.
No. Going back in, going back in on the same direction, you're exposing yourself to failure. Because one thing about this trend, you understand, is that by the time you jump out and it has progressed a little bit more, and you now jump in again, the chances of reversal are greater, you understand? Or the chance of reversal is greater. So don't jump back in. See, that's the reason why we're having this meeting, so we can at least have a proper understanding of key levels, support and resistance, and the reason why they are called key levels, understand? You see, it's this. The market does not just hang in the air, you understand? It doesn't just hit any spot anywhere at all. These key levels, they always respect and obey them. Sooner or later, they always, when I say always, 100% of the time. So if you know 100% of the time, and that's the reason why maybe sometimes she can attest to it. When we're talking, I say, you see this movement is going to hit this point and then to go back. How do you know? Look at it there. And every time it has happened that way. You see, and that causes your confidence to grow because you now know you understand the market more, you understand? You see, the key levels, support and resistance, they are extremely important. There's nothing, no commodity, not even Bitcoin, not even cryptocurrency. They don't disobey key levels. They can't disobey key levels. It's like the law of gravity. You understand what I'm saying? It's like the law of gravity. It does not fail. As far as the earth remaineth, seed time. You understand? You know, when God said that, God meant it to be a law. You understand? You know, when God says, as far as the earth remaineth, that's the law. Nothing changes it. And that's exactly what key levels are. And I'm not joking, I'm serious, I mean it. You understand? Because you see, that's the reason why we need to understand our key levels. You understand? But the question is, which key level do you trust at each time? That's the major question you need to answer. So, and that's the reason why you see, we'll have TP1, we'll have TP2, we'll have TP3, TP4. There's a reason for it. Check out all those TPs. You will see that those TPs are actually on the different key levels. You understand? Those TPs are actually on each of the key levels. But the problem with the key level is that if you've not done your analysis well, if you get the direction wrong, there are many key levels. It could hit the key level on the opposite direction and you lose money. You understand? It could hit the key level on your direction, then you win money. It always hits the key level. Always. So the thing is, we need to be more to become more profitable trader and a more stress-free trader. You know, you need to understand key levels. Yesterday, my trading, I made about 30, almost 35% of my account yesterday. All right. How did it happen? What did I do? You know, I was at work. All right. So I just got a breather in between, and then I entered into a gold trade. You understand? You know, I saw the movement gold was preparing to make. I anticipated it and I entered into it. I didn't care. That was what we're talking about now.
Yeah.
I anticipated it. I entered into it, and I set my take. I cannot be at work and watching my phone. You understand? Or watching something else, because it's not as if somebody has eyes on you, but it doesn't tell good story about you. You understand? You know, or you're there meeting someone and then you're looking at your phone. Oh no, you shouldn't do that. All right. So what did I do? I set the key level, just left it there, and then just focused on what I was doing. Guess what? It hit my key level and passed it. You understand? I just opened my account. Wow, profit. That means the key level, it obeyed it, and it even went beyond that first one. I set it on and went to the second one and hit that one as well. You understand? You know, and I'm not regretting, oh, why didn't I hit it on the second one? No. This one, I put it there. I collected enough money. That's my money. It's in my pocket. I'm not worried about the one in the bush, right? You know, or the one I didn't get, the one I should have gotten. No. And that's the reason why, if you have this mentality as well, FOMO will not attack you. Who knows what FOMO is?
Fear of missing out.
Exactly. Fear of missing out. You know, fear of missing out can make you make mistakes. In fact, fear is not good in any case at all, you understand? You know, and when you have fear of missing out, oh, this one is happening, let me just jump in, without doing proper analysis, without proper risk management, that's how people blow their accounts. I know this because it has happened to me more than once. You understand? Not only once, it has happened before. So you learn from your experience. You see, the thing is this: experience is a good teacher, all right, but not the best teacher. Okay, but when you learn from experience, it sticks. But someone can actually tell you, and you adhere, and you listen, and then you avoid it. You understand? So experience is a good teacher, but not the best teacher anyway. So that's it. All right.
Please, this three sisters training.
Three sisters, yeah.
Where is it from Javed or who?
Three sisters from Javed, yes. It's on Oracle. It's also on Wow. So the one thing about the three sisters, I think what we should do, our next meeting, I'm thinking of us having more frequent meetings, not just meeting only on Wednesday and doing opportunity calls twice a week, you understand? All right. Me, Noy, and Paul Farmer, we are planning a kind of a conglomeration of the three. It's not three teams, we are all the same team, right? But the three of us coming together to kind of give more value to the team in terms of live binary trades, live trading signals, you know, like this. You know, we sit down, we call trades, and then we trade them. They are trade ideas. They're not, we don't call them signals, you know, they are just trade ideas. We trade with them, and then of course we'll make money together and increase the frequency of our opportunity calls. And every meeting we'll be having, the three of us will bring our people there. You understand? That means we're expecting a bigger house. So sometimes, most of the time, I will talk. Sometimes Performer will join. Sometimes it will be no, you understand? but it will be three of us bringing the sauce. And also, some of us here are also part of our, like, I have leaders in my team as well, you understand? Performer has leaders in his team. Noy has leaders in his team. So all of us will put our heads together and make this work, you understand? So it's not just me, Performer, and Noy. It's going to be all of us, all hands on deck. Because, you know, and then we'll be adding to it as well, digital marketing. Noy knows a little bit about digital marketing. Noy is working on something that will help us when we call the trades. It will just go into the Telegram and then interact with his MetaTrader 4, and he will not even have to place the signals. The signals will just place themselves from Telegram. He said there's something he was working on, and you know, someone helped him develop it. It's almost done, and when it's done, it will be available to all of us in the team as well. All right. So these are the things that we're working on. A lot is happening. A lot is coming on. You know, I know very soon we'll be hearing some news about changes in the team. I do not want to let the cat out of the bag, but we are stronger. We're more solid together. Understand? We're not splitting, you know, or scattering the team. We are together, one. Understand? And divided we fall, united we stand. So we are united in this. The frequency of the meeting is going to increase, and more value to the team in terms of learning, in terms of trading together and making money, both binary options and normal trading as well. All right.
And the time change, the opportunity call times.
The call times, we're thinking about 7 p.m. UK time or 8 p.m. UK time. You understand? You know, these are the two times that are open, because so that, you know, we reason that, you know, 6, 7 p.m. people might be making dinner or trying to take care of the family and all that. Everybody is not like Emmanuel that does not cook in the evenings. You understand? I know. She's smiling now. She's happy. You know,
happy
because I'm hanging myself out. You know, so my thing is this: it's good to, you know, give time for family, for you to actually, you know, take care of the primary need, maybe taking care of kids, and most of us are even women. You understand? Most of the people in our team are women. You understand? You know, women are more like the go-getters these days than men.
Yeah. But for now, the time hasn't changed, because I want to put it on my, you know, my emails.
Okay. No, I think we said from this week. We'll change the time so that it can, you know.
So from tomorrow then.
Yes, from tomorrow then. Yeah. So from tomorrow.
Now 7 p.m.
7
p.m. UK time, GMT.
Oh, yes. Is it
okay.
7 p.m. or 8 p.m.?
7 p.m. UK time is 8 p.m. our time.
9 p.m. here.
Yeah. 9 p.m. our time. Yes, 9 p.m. our time. 8
p.m. Must have finished with the kids. Everything is all right. Then we can.
Okay, that's 8 p.m. GMT.
8 p.m. GMT. Yeah. Yes.
Yours will be 8 p.m. Yes.
Okay.
Yeah. So then we'll have it 8 p.m. GMT, and then I'm sure when we all are having the meetings together, it will still be the same time, the same day, but we'll add Tuesday to it. So we'll have at least 3 and one more day, maybe 4 times a week is not so bad, because it's a bigger team, you understand? And the bigger team, everybody committed, everybody attends the meetings, whether you're presenting or not, you should be there, because even if you don't have prospects, be there, because by coming around, you learn 1 or 2 things about the product that maybe you must have missed or something, you understand? So we're all learning. So by the time you come, you join, you listen, you hear, you learn more. Because the truth of the matter is this: there's no substitute to actually knowing your products. When you know your products and you know your product very well, that's how you make sales. You cannot convince a customer to buy what you've not been able to sell to them well. That's why a car salesperson, understand, is a very good example, right? Because if the person is coming and without even driving the car, he's standing there and telling the customer everything about the car, what the car can do for the customer will like it and jump on, right? That's exactly how it is. So let's maintain coming and invite even the people that are under us, encourage them to even attend this meeting, because I'm sure some are under me, some are under you, some are under the people that are under you and all that. So let's gather together and grow this and make it work. All right. And not only that, we'll be talking about marketing strategies as well. Best video to use. We intend to shoot a video that will be good for everyone to use, you understand? So even if you're not very savvy in shooting video and all that, understand, you can have a video with proper hook and even landing page and all that. We are doing all those things and we're working on them, all right? So that everything will work out well for all of us. Okay. All right. So
talking about marketing quickly, Emmanuel, do you know about this when you're doing YouTube, you're setting up your YouTube and the Google tags, when your thing is not firing, when the pixels do not fire, when I go back to my page, and I try that tag assistant thing. Do you know what I'm talking about?
Tag assistant, how do you mean?
If you want to track your sales, the people as they are going through your funnel, you can use a tag assistant to know whether your thing is firing, so that to keep records of all the pixel setting up pixels.
Yeah, the thing is, setting up pixels is mainly for Facebook, but for YouTube,
it's for YouTube as well.
Yeah, but mainly I said.
Okay, mainly, okay.
But for you have Google Analytics, you understand, to help you do that, understand?
Okay.
Google Analytics, you have your because you can't do a YouTube video without having a Google account. Am I correct?
True, yeah.
Yeah. So in your Google account, make sure you enable your analytics, you understand? Enable all the add-ons that they are activated, you understand? Because that will give you all the tracking you need. Will tell you how many clicks, how many people how many minutes they spent on your video, how many seconds they spent on your video, and what's happening to the videos. Do people click on it at all, or they click on it?
So do you know how to do that? That's my question. That's where I'm stuck right now. Because my video is ready, my landing page, everything is ready. It's just to actually put the ads, make it active, basically. And then second question, do you use placement ads or do you use keywords?
I use keywords, you understand? Because see, placement ads, I tried it once, all right? I tried the placement ads. They cost money. Many people were in fact, I had many engagements, you understand? I had a lot of engagement, but almost very low number of leads, you understand?
Okay.
So then I just stopped the placement ad. It's expensive, costs money, but at the same time, you don't get a lot of results for it. Those placement ads, those display ads, they are called, you understand? It's like, somebody is just
target videos.
Exactly. One, they just see it. But then the thing is, it targets a lot, especially if you have a good budget, right? So it will target and target and target, but the thing is, it might be targeting the wrong audience. But if you use keywords, you understand? Keywords are more specific, you understand? Especially if you target it very well and you know the people. Let's say, for instance, now people that are watching Robert Kiyosaki, they want to make more money, you understand?
Yeah.
Make money, and they want to make money online because Robert Kiyosaki supports network marketing, supports affiliate marketing, and all those cryptocurrency stuff, right? You know, so anybody that is watching him will know exactly, the thing just breaks the thing in between and then shows your video, shows your ad, you understand? Then your hook now comes to play. If your hook works well and you captivate them and you make them watch more than 30 seconds, the likelihood of them clicking on your link and dropping their email is much far higher than doing the display ads, understand?
Okay, so keyword is better than placement ads.
Yeah.
Okay, that's the next thing I want to do now.
Yes. Okay. So yeah, that one works more. That one works. It's more solid. All right. And then the purchasing leads as well is on. What's her name? Nicola Lewis. Understand? She bought leads, and all 25 leads have been locked in. And then you just will have to just give them what they need.
But I kind of feel that would be a bit impersonal. Do you understand? Unlike people that
These
maybe
guys are
respond to your
interviewed.
ads.
No, these guys are interviewed.
By who?
By the B marketing team. You know, they had their ads out, and then you know, they left their emails, and then they called them up, interviewed them, and they are interested. You understand?
So they're already product aware.
They are product aware. They are hot leads. You understand?
Okay.
Yeah. So, and then getting hot leads for that price is a big bargain. You understand? It's a very big bargain, because
Okay.
your chances of conversion is very high. You know, higher than, you know, how maybe gathering 1,000 leads and you have only 5 converting or 2 converting. You know, yeah.
Yeah, Emmanuel, this
Buy 25 leads, and then those 25 leads, you see maybe more than 50% of them converting within a month, and then maybe probably almost all converting. That's awesome. That's amazing. Yeah. So Tina, you were asking.
yeah, I'm asking about the leads. Are they attending opportunity calls, or just the campaign that's the what is it called? I'll be sending to them the campaign.
What's down your funnel? Once
Python.
they drop their email address, it's up to you to do whatever you want. If you want to invite them to the opportunity call, best send them the emails, attach the link, the Zoom link, and get them to attend. Which to me is the best approach. Even if Quantum is sending them emails and doing whatever and doing all whatnot, understand? Still invite them to the opportunity calls, so that you can give yourself a boost, you know, in terms of them converting fast or faster, so to say. Because you see, all those videos, all those emails, there's nothing beats it than live. They come live, they see 20, 30 people gathered together talking about the same thing, and they have an opportunity to ask questions, you know, and then everybody sharing testimony live. You understand? That one is 10 times stronger than sending emails that some of them are not even read. You understand? And
adding them to vibes.
Exactly, yes. And adding them to vibe by the time they indicate interest. But for me, even bringing them to opportunity calls beats adding them to vibes. Adding them to vibes as well works very well. It's good. It's good, right?
So,
okay, Esther, over to you.
Yeah, I wanted to just say a little bit before maybe Emmanuel would take us about with the support and resistance. So when I went back to those 2 trades that did not pan out, when I went to check it, and of course they came from the first day's trial, you know. So I checked, and I found out that they were actually key levels. You understand? So because I went back, looked at it, and I saw that everything was okay with my strategy, but what I did not check was key levels. You understand? So actually the thing was going my way. Then it just shortly after that, there was a turn. I wasn't looking at the chart. You understand? After that, I thought, okay, I was just beginning. The strategy was okay, but now I'm incorporating key levels. If I'm checking all these things, Emmanuel is going to be talking more about key levels. I'll check before I take the trade that is not a key level. Because if it's a key level, there might be a reversal of the trend at that point. And you know, I might not know. So
okay, so do you always wait for the 3 indicators to be saying the same thing? What if one is not saying the same thing? What is 2 are saying sell and 1 is saying buy?
Another thing I incorporate is price action. You understand? But I stick to my method because I know it works. You understand? Like today, I took 33 trades, you know, and they all panned out. There was actually one that, you know, in the hurry of clicking, I clicked a sell instead of a buy.
Okay.
You know, so that was the only one. When I saw, I looked at the trend line, I looked at my ADX, I said, what the heck? Why is this one a sell? It's supposed to be a buy. So I just noticed it, I just closed it. So apart from that, apart from that one, I got every of the 33 trades that I put up to the 33 trades. It's crazy, man. So just imagine that I'm taking that on my live account. But for me, I believe in testing out things. I'm even writing down my observations. I've seen what exactly I'm doing, because when you come back, you don't know what happened, you know? So I'm trying it out, and I'm sure with time, when I'm trading it live, then I'll just bring it out to the group and make it a thing of authority that, okay, this is correct. Working. But of course, I'm saying this now so that we can just on our own try it out, because we have so many currency pairs. If you look at this chart now, I've arranged everything almost alphabetical order. So you can just click on different ones. Yeah, just start with AUD, USD. Just go on like this. Okay, is this one working? You know, just go on, check it out.
So if you don't see one that has that all three are saying the same thing, you won't take it.
I found that, yeah, I won't take it.
Okay.
I found out now that that's why testing is good. I found out that from 1 o'clock my time to 5 o'clock is the best time for me to trade.
Yes, because that's US open time.
Yes, that, you know, both of the sessions come together.
US and London time together.
Exactly. So when they come together, there's a lot of volatility and the trades are going on. You know, you can find a lot of pairs. Like in the morning, sometimes I could stay and just find like 2-3 pairs that correspond to those parameters. But I'm getting better, because I found out that also what I need to really get to understand and know is price action, because sometimes price action actually trumps everything, especially when it comes to gold, you know. So trading gold is quite simple, and it's mainly support and resistance. And of course, you can use all these indicators to show you the way, you know, to make it better. But gold actually respects price action a lot, support and resistance.
Okay.
So that's all I have to say today.
Thank you.
The thing is truly well tried, maybe I've gotten more than 100 without
110%.
Exactly, without pressing sell instead of buy. So I can come and really share it in a better way. So
that's one question.
You know, the funny thing, I was doing the same today. I was using EMA, DX, and MACD.
Yes.
And I took 2 trades, only one hit stop loss. And I said, where do you put your stop loss?
I was putting.
You said you were using 50 initially.
Yes. I'm actually still using 50 in a way, you know, but it never gets to 50. As in, you just see your trade going in the right direction. Even if there's a drawback, it's not a big drawback that your heart is in your mouth.
My phone?
You know, the drawbacks are quite little.
My empty full screen now from today.
You say?
I said I'll end my empty full screen from today to see my gold trade today.
Okay. So Emmanuel, over to you.
Before Emmanuel, please, Esther, if you place your stop loss in 50, then what about take profit? Is it on 10?
Yes, I'm using that 10 and 50 for now.
Okay, as per strategy of Peter, right?
Incorporating some part of it, but today I tried key levels. You understand? Okay. Yes, I tried a little of the key levels, and my experiment is going to increase more towards that, because one should be able to take more profits. Like there were key levels that were on 20 pips, 30 pips, you know, or even higher. You know, so I tried some today. So going forward, I'll be trying more key levels so that I can collect more profit. Or another thing I can do when I'm very sure of the strategy, I can increase my lot size, you know, and just that's another thing to do with this strategy. So I'm still testing and
Thank you very
testing.
much
And
for coming up something positive for us. Thank you. We're proud of you.
you're welcome. I'm very, very excited. I can hardly, I sleep though. I'm just excited to get up in the morning and just try my trades, you know.
My excitement will join yours by the time you stop doing demo.
Okay, no problem.
And start making
I know the
money.
team is in support of me trying it so that it will be good for everybody. Everybody can say,
Yeah.
okay, this is the strategy you know.
I knew it was going to work. That's the strategy I used. The same thing I told it was going to work, and you still wanted to go and try and try and try. Is it working now?
Yeah, it works. But...
So that means I was right. All right. Okay. Stop sharing. So you see the thing,
sorry.
when we're talking about support and resistance, we're not talking about support and resistance because you just want to talk, right? Support and resistance is the mother of trading, you understand, right? You know, I don't want to talk about, you know, strategies and non-strategies and all that, because any strategy that is not based on support and resistance, you know, is actually not to your benefit, so to say, all right? You know, there's some traits that you take and you're taking it, okay, because let's say, for instance, now, in trading, right? In trading, if you check your lowest point and your highest point for that particular pair, for instance, you know, the previous day, you have an idea where the pair ends, you understand, and where the pair begins, you understand. And if you're closer to the lowest point and you place a buy, the chances of hitting 10 pips very, very high, you understand. You don't need rocket science to know that you can hit 10 pips quite easily, all right? You know, to me, I don't really know if it's a strategy or not, but of course, if it's making you money, it's good, all right? But the thing is this: if you understand key levels, if you understand support and resistance, if you understand, you know, price action and where the market is going, you understand, trading becomes very, very easy. That even sometimes when you want to do those strategy and you look at the price action, you know, and you look at your indicators and they're telling you otherwise, you wouldn't do that. You see, I want us to become real traders, understand? Traders that can actually trade and teach others how to trade, understand? All right. And to that end, we're trying to, you know, come up with, you know, we're trying to understand, you know, price action in combination with indicators to actually know exactly how market works. Yeah, like we've been showing and illustrating, understand? 100% of the time, this happens, that happens, that happens, that happens, is a buy. All right? 100% of the time, that happens, that happens, that happens, that happens, it's a sell. What would you need something else? No, it becomes easy, you understand? It's not rocket science. It's actually very easy, you understand? You know, you understand price action, you use your EMA, maybe make it to your 3 sisters, and then add ADX and add MACD. You are in safe hands. Whether you add Ichimoku cloud or not, it's something entirely different. It's up to you, you understand, right? But if you do, more safety, you understand? The more indicators you have, the safer you trade, you understand? So it's actually about you being a confident trader, so that you're not eating off somebody's hands, not even Emmanuel's hands, so that, oh, if Emmanuel doesn't give signals, you will not eat. No, you're not a trader. If that's how it is, you need to be a trader that you can enter the market confidently whenever you want to enter the market. Sit down, look at the charts and say, yeah, this is what's going to happen. And you're not saying it because you want to gamble. You're saying it because indicators are telling you, all right? And 99.9% of the time, that 0.1% is barring any crazy fundamental analysis that will just kick in without you knowing about it, understand? That might make it go the other way, understand? Because it can happen. It can happen, all right? But then you've given yourself 99% chance of winning, all right? So in the next couple of minutes, I would like us to, go through price action and support and resistance, because time has gone. We'll not go through every other stuff. But trust me, we'll have a lot of time, and I'm here to give everything I know. You understand? Well, not everything. I'll keep some secret to myself.
We'll tweak it out of you.
No, of course, if you have it and you keep it to yourself, you're not helping yourself, you're not helping anybody, understand?
Yes.
So this, you know, the first thing that we need to understand is actually price action. What do you understand by price action? Can anybody tell me?
Where the charts are going, the candles,
The direction of
the direction of the candles.
Bennett.
No, I can't tell you nothing.
You guys,
What did you say?
I love this guy.
It's
Said what?
funny.
All right, Esther, what is that by price action?
It's just the opening, the closing of the candles and how they move, and yeah, it's just about the candles actually.
All right, yeah, price action is actually the direction of the market, and you know, just like we have support resistance and we have demand and supply. You understand? These are the things that push market upward. You understand? And downwards. You understand? So another quick question: what makes price to go a given direction? And another one, what makes it to stop and change direction?
Demand and supply.
Just like you said.
Okay, demand and supply, yes.
Buyers and sellers.
the body is
Okay, buyers and sellers.
Institution.
That's the correct answer there. Buyers and sellers, right? Because the thing is this: if more buyers are coming, that exactly, it's just demand and supply as well. But buyers and sellers, demand and supply, right? So if more buyers are coming, let's say more and more are buying gold, what will happen to the price of gold?
It should
Go up.
Exactly, it will go up because demand is there. More demand, it will go up. There is a point in which and then it becomes oversold. You understand? Or overbought. It becomes overbought. That is, too many people are not buying. Let's say 80% of the people in the market are buying gold or trading gold are on buy. What happens?
Usually the price will fall when the market is tired.
The supply, the demand is too much for the supply to up. So what happens? The gold cannot be supplied at that level that is being demanded.
Yeah. Cannot meet up the demand. It has to.
So this is the balance that makes market to go up and down. You see, the thing is this: if you understand that nothing ever goes only up and nothing ever goes only down, you understand? You will understand trading a little bit better. And that's the reason why I can just come out and throw out a signal and tell you it's a buy, and you're targeting only 10 pips. If it doesn't pan out now, it can pan out tomorrow or next tomorrow. Of course, it will. Do you know why it will?
Because whatever goes up must come down.
Exactly. That's the thing. Okay, if let's say Euro USD has always been doing upward trend, today, just like what Bitcoin has been doing, crazy, right? Right now, your euro would have been like 10,000 to one USD, understand? So, but it's never like that, and it's never going to happen like that, understand? All right. So there's always an upward and downward movement. Okay. So this should give you more confidence in the market. Now, even if right now it seems as if that thing is going against you, you understand? It will definitely come down. That's the reason why proper risk management is very important. Because if you don't do proper risk management, before price comes down to meet your level and even give you profits, your account is wiped out. Because you chose a jumbo size, you understand, as your lot. Are you getting me now? So when you do proper risk management, you don't ever lose money in the market. If you do proper risk management, even if it hits stop loss, because I know gold can be crazy. You see, gold can do, we know gold was just 17, 16 not too long ago. Today, gold is 1841, 1845, and so on and so forth. And before it will come down to 17 again, it might take months. Nobody has that time to wait. So that's why when you set your goal, set your stop loss, you hit your stop loss, lick your wound, come back the next day and collect back the money. You understand? This is going towards your trading mentality. When you go to the market and the thing is going against you, look at it, okay, market, you borrowed $100 from me today. Tomorrow, I'm going to borrow $1,000 from you. You understand? The market borrowed $100 from you today. Tomorrow, you're going to take back I'm not talking about revenge trading. That's not what I'm saying. You understand? Because revenge trading is when market has wiped you out today, tomorrow you say tomorrow, today I must deal with you. Market will deal with you again and take you to the dry cleaners and bring you back dry. Don't allow market to do that to you. You understand? So the thing is this. You know, when you talk about market, it's as if it's a living being, but actually it's a living being on its own. Imagine a market that over $7 trillion, you know, are traded every single day. That's a huge market. Understand? So briefly, we need to understand, you know, price action, and then, you know, there's also a geometry in price action. Have you heard about it before?
Geometry.
Geometry in price action.
Yeah.
No.
Okay, good. Except Esther, the thing is this: when you see some forms, some triangles, some squares, some whatever, you understand, it means something in the market. It means something is going to happen in the market. So just briefly, we know about candles. Who doesn't know about candle? If you don't know about candle, let me see your hand up. Okay. You know what candles are, right? But do you know the different formations in the candle?
I studied the candle pattern.
Like candlestick patterns, the harumi, the
engulfing
candle, hanging man, morning star, evening star, shooting star.
Dragonfly.
Do we know all that?
Not
Yeah,
fully.
we know.
Not fully.
Not fully. Not fully. Go and read your candlestick Bible. Who doesn't have it? Do you have it?
Well, I think I've got it. Yeah.
Yeah. So go back.
I downloaded it from Epic.
Yes, we
Yeah.
all we all have it. So just go there, read it, study it, and then not the whole thing, of course. All right. Because you see, when you understand, you know, these candlestick patterns, understand, you understand when a reversal is imminent, of course. But you see, the thing is, if you understand your indicators, understand, it makes life easier for you. All right. That when you only use the price action, the candlestick setup as a confirmation of what your indicators are saying, all right? Or vice versa, you use your indicators to confirm what the price action is saying, actually, you understand? So you see, trading, like I say, is easy. It's not difficult, it's easy. Tell yourself that. Convince yourself it's easy, because the biggest mistake that we make is sometimes we look at it as it's difficult and we're approaching it with fear. And everything we do with fear, what happens? We fail. Yeah, we fail. Everything we do with fear, and even the Bible says it, understand, that everything you do without faith is sin. Am I correct?
Yes.
Yeah. Everything you do without faith is sin. And what is fear? Fear is absence of faith. You understand? You know, you don't have faith in what you're doing, you're scared, you're afraid. You know, one of my mentors said that, you know, fear knocked on my door, faith answered, and there was no one there. Do you understand? Do you understand what I mean? Do you understand? Fear knocked on my door, faith answered the door, and there was no one there.
Fear disappeared.
Exactly. Fear was gone. Fear knocked. And then faith said, who is there? When I opened the door, the guy ran away. Because fear and faith are like light and darkness. They can't coexist.
No.
But they can somehow. Because if you come to a room that is a little bit dim, you understand? There's both darkness and there's light. And you know, you see, the thing is, when we're talking about faith, faith is not let me say, the strength of faith is not your side, the side of your belief, you understand? All right? I'm not preaching. Don't worry, I'm not preaching. You know, because the disciples told Jesus, Lord, increase our faith. What did he tell them? He said, if you have faith as small as a mustard seed, you're good to go. Why? Because Mark 11:21-24, if you shall say to this mountain, be thou removed and be thou cast into the sea, and you will not doubt in your heart. So faith, the strength of faith is a function of the amount of doubt you have. If you have zero doubt, your faith is absolute, just like Abraham. Abraham had faith, and then he's not doubting at all. There was no doubt. Abraham has not seen Jesus this time. Jesus has not come. But Abraham had faith, small faith, and zero doubt. And that was why it was accounted for him for righteousness, understand? So we're not preaching. So let's just go ahead and do what we're doing. All right. So the thing is this: if you believe, you can. Tell yourself you can. That's why that mindset thing, you know, you wake up in the morning, you do your daily affirmations. Those daily affirmations are to kind of bring out faith and belief without doubt. You see, I have lost some traits that I regretted later because of doubt. I did my analysis properly. I set my take profits properly. But then I saw the thing doing a kind of a pullback, you understand? And I panicked. And I did not want to lose my entire account or lose more money. And I closed it at a minus. And guess what? The next second after closing it, it turned out. And guess what? I would have made $1,000. Instead of making $1,000 in profit, I ended up in a loss. I lost $100. You understand? Just imagine that kind of a thing. You understand? Just imagine that scenario. Why? Just fear. So if you can knock away doubt, and just like what they used to say, when you're doing demo, do you fear? Are you scared when you're doing demo? No.
I am.
Okay, your own case.
I want to see all blue. I want to see all blue. I'm afraid of red.
You see, someone was talking to Esther yesterday. That was in the night, and the person is going to join us. The person is going to sign up very soon. The person was like, "Oh, I did demo and it went very well." She did a few demo, of course. It went very well. But when she started doing real account, she was taking out, she was wiped out. You know, guess what? When you're doing demo, there's no doubt, there's no fear. You have no skin.
You have your personal money committed to it. So that's why you're scared.
No skin in the game. You're not scared.
If it's your money,
By the time you start worrying about losing the money, what happened? That's when you make the biggest mistake. In fact, you take some action that you want to slap yourself later. How can I do this kind of silly mistake? You understand? You're not thinking straight because you allowed fear, doubt, negativity coming, and then it affected you. So without much ado, let me just share my screen a bit. So we'll go to support and resistance. So we'll see the power of support and resistance. All right. But before I do that, I want to state that support and resistance, they did not just bring themselves there and abandon themselves and walked away. You set a lot on my metadata here. Eh? Mm-hmm. It's crossing horizontal line in okay. 15 crossing horizontal time. Okay. Let me see. Did it cross?
Actually remove the line, maybe, or the line, yeah.
I removed the line. I removed it.
Okay. So it crossed now.
Yeah, it crossed. It crossed.
That's another thing I want to learn how to do.
Oh no, it's very easy. It's very easy. So the thing is this: there's a lot of value, a lot of source to share. Let's just keep tuned and keep attending meetings. And you see this money, we will make it together. You understand? Amen. We'll make this money together.
Amen.
To the point that when we're talking about trading, understand, we'll become a trading expert. A trading expert group, a team of
gold diggers.
No, when you put it that way,
gold diggers, not gold diggers.
It's kind of negative.
No, but actually, it makes sense. You can say gold miners, understand?
Gold miners.
Find the gold, understand? We're not gold. Gold digger.
But when you say gold digger, it means something else. So.
I know.
All right. So now we're looking at candlesticks, right? But first, when you want to do support and resistance, it's always advisable to start with longer time frames. Understand, like 1 hour, 4 hours, 1 day. all right? You're not doing it because you want to do swing trading, okay? You're doing it because you want to see exactly what the price has been doing since, all right? How it's been behaving. And like we said, it always obeys that behavior. It does not change. It does not change, all right? You see all these lines now. If I clone this line now, all right, let me clone this line and then we'll look at it so you see where everything ends and see how they pan out. Understand? So you understand that it happens every single time. It's not just something that happens once, it happens every single time. Okay, you see, price came, did like this, touched, went, came down, and then got to this point. All right, this point here now, let's call this point a potential key level until we can verify it. You see, a key level is a level where you see price touching more than twice. Understand? Right? It has touched once, it touched twice, and then the third one, it hits there again. You understand? Right? This one is touching here, this is touching here, this is touching here, and you come here, this one is touching here, this one is touching here. Why? Because there's something there on that level that makes it touch there every time before it reverses. You understand? Every single time. So if I minimize my graph now, you see, and then follow it and see, okay, let me go a higher time frame. All right. It's even here too. Touched here, touched here, touched here. And then this one went through it. You see, the thing is, it always wants to hit that line or get very close to it. That's why when I want to set my take profit or stop loss, I don't keep it at exactly that key level. If I'm setting my stop loss and I'm on a buy, I set it lower, a little lower than that key level. So that even if it touches that place and wants to do a wipeout, because you see, sometimes the market wants to take people out. The market understands that people use key levels. So what does it do? It might just break the key level by just 2 pips or 5 pips. And guess what? A winning trade.
Is it the market or the broker?
No, not the broker. The broker doesn't have any idea. No, it's not the broker.
Okay,
That's why it's called price action. It's price that is creating the action of the lines that you're seeing. All right. So price is pushing it upwards and pushing it downwards. Understand? So let me go to 4 hours. So you see this same line, you will see how it cuts through some certain areas. All right. So let's spread it out.
When it is 4 hours, the horizontal line will move up. It will not.
No, because you've kind of brought the time, it kind of compressed the time. Okay. So when you compress the time, the same action has happened, but of course, it will show a little bit differently because the time frame now is larger. That's why that's the essence of time frame, actually. You understand? People look at it, let's say 4 hours is a very good place to start in doing your analysis before you put out any trade, because it shows you, like now you see days. This one is even showing you until January. Okay, this is December last year, November to May, 1 full year. That's what we're seeing here now. All right. For 1 full year, this is what gold has been doing. Okay. Australian dollar, Australian AUD, AUD card. All right. This is what it has been doing. It doesn't matter. It can be for gold. It can do the same thing for gold as well. All right. So you see, there's a key level here. The key level 1, 2, 3, 4. Sometimes the strength of the key level can be determined by the number of touches price makes on that level. You understand? All right. So you see here now, this is a key level, the same key level that we talked about. You see here, this is a touch. This is a touch. That's 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 a touch. It just keep counting. You understand? There are many touches on this singular line. So that means that at this point now, if maybe you want to do a sell, and you do a sell and you put your key level here or your take profit here, it will definitely come down, hit here, go up, touch here before going back up again. You understand? So that means this is one of the strengths of key levels. And when we're talking about key levels, it's like talking about support and resistance. Who can tell me what support and resistance is? Who can tell me?
What's the question?
Support and resistance. What are they?
Support when the price hits the floor, and the resistance when it hits the, what is it called?
The roof.
The
Ceiling.
Yes, the ceiling. Very correct. So when the price hits the floor, what happens next?
Then
goes up.
it goes up, yeah. It turns to,
That's to go bullish, right? And when
yeah.
when it hits the roof, it goes down. So that's why support and resistance very, very important. Very, very important. And support and resistance form the key levels that we're talking about, right? Any level you see that is a key level, it has formed either support or resistance or both. Do you understand what I'm saying? Do you know that a key level can both serve as support and resistance as well? Do you understand that?
Yes.
Again, sorry.
A key level can both be a key line, a line or a level could be a line of support and a line of resistance as well.
And that is consolidation, right?
No.
No.
It's okay. Let's say, for instance, now, right? Let's go by this line now that are created. Let me expand it a little bit. This very line, this is the line we're working with, right? So at this point here, this line, this place is the roof, right?
Right.
That's resistance because after that it went down. Okay. And then here there's a support, then it went up. And here at this point, that same line that was resistance before became what? A support.
Okay.
And then at this point, and then here again, the same line became a support. It was resistance before. It went up, you know. So that's exactly why when you can say a given level can both be support and resistance, and that's a very that level tells you that that very thing is a very strong line. That's a very solid key level, all right? In terms of whether the market is going up or going down, it touches there and reverses, understand? So that means if you're setting your take profit or your stop loss, you have to consider that very level. It's not difficult to understand. So like 5 minutes, we understand support and resistance. 5 minutes, we understand key levels. If you understand key levels, trading becomes a little bit easier and more understandable. It becomes less of rocket science, you understand? All right. Because if maybe market was doing this, you understand? All right. And then I come here and I see a partial W. Market did this, did that, went down. I said this is going to go up, all right? Then it goes up. So in the next 5-10 minutes, I'll just be taking us through the different shapes, you understand? The different forms of price action and a little bit of price trigonometry, understand? But not exactly, because I'm not going to be talking about the squares and the triangles, understand? But I'll be talking about double tops and double lows and everything, and then you understand this thing is showing a buy or this thing is showing a sell. That is, you're doing this without looking at this one, of course, understand? Because this one and this one will tell you exactly what's happening. But price action, you need to also be able to understand price action so you can correlate it to this one and this one. That's what I'm saying.
What do you want?
Okay. So let me open that one up and share it so we can see exactly what we are talking about. So are we seeing my screen?
Yeah.
Yeah, this is chart pattern, right? And you see it now, what do they call it? Cheat sheet. This is to cheat the market, understand? All right. Okay, this is how you actually cheat the market, because you see, sometimes you look at the thing as I say it's going to be a sell. How do you know? This is it. All right. It's going to be a buy. How do you know? This is it. Okay. So but sometimes it might be subtle, sometimes it will be very obvious. Okay. So now we're looking at the chart. Sorry. So here we see a continuation, right? We know what a continuation is, right? Price was coming from somewhere, went up, did a pullback, went up again, went down, went up, went down. And then for me, once I see price doing this, you understand, and it's converging slowly, you understand, I know something big is coming. All right? I know something big is is coming. Especially when he's doing, you know, do we know inequality and probability, right? We know inequalities, right?
Mm.
We know inequalities, mathematics, right? Hello?
No.
Inequalities. I know say Adenike, don't forget this one because it's
Me, I forgot so much. I never liked maths.
Yeah, of course. That you see, the thing is this. Initially, I was in that class. I say I didn't like until I did AdMaths. Understand? You know AdMaths back then in Nigeria. You know, AdMaths, and then later, you know, my interest when I started enjoying it. All right. So my thing is this. You know, we have greater than, all right, and less than.
Less than, yeah.
Understand? So look at this one as greater than. Okay. When you see this sign greater than in a chart that is converging, understand? And you can draw this greater than sign, it means it's going to go up. It's simple. Greater than, that means the next thing that is coming is going to be greater than this, right? Okay, it goes up. And then this other one, it's converging the other way, but it's not pulling upward, but it's actually pulling downward. You understand? That means the planar part is from up to down. Okay, that means it's going to pull down, it's going to pull back, it's going to go down. All right, because price came up from here, did this, did that, and it's getting smaller and smaller. That means it's getting smaller. It's just doing the dallying to actually pull down and go down. All right. So you see, at this point here, you can set your TP at this level. Okay, and your entry point is here, and then your stop loss is here. Because after doing this, if at all this movement is going to fail, if it hits this point, you know it has changed and it's going to go down. So there's no need sticking around. But you've not lost so much, you just lost a little. These patterns are very, very important. I'm going to paste it in our group so we can look at them later and actually master them and know exactly what they are saying. Okay, all right. So this is bullish continuation. This is bearish continuation. This is bullish reversal. Bullish reversal is when you see price, all right, making a double bottom, all right. It came like this, like a W. Came down, hit a certain point, a certain key level, went back down again, and then came up and then break that level. Once it breaks that level, that's your entry point, all right? Because when it came down here, touched that level, came down, touched the level again, and broke it. Once it breaks it, enter. That becomes your entry, all right? That becomes your entry, and then you set your TP at this peak here, at another key level, of course, and then your stop loss should be somewhere around there. Because why would you set it around there? Because once it breaks back in and hits half of that line, it's going to be a reversal, okay? And when that happens, it goes down. Instead of going bullish, it will go bearish. So setting your stop loss here actually makes a lot of sense, all right? But for me, once it breaks up and it's going up, I will set my TP there. If it doesn't hit my TP and I see it reversing down, I cash in. I cash in and I wait for the next entry. Better than using your money and leaving it there to play hide and seek with the market, understand?
But what if it decides to now be a triple bottom and goes back down, like the one below?
Like this one? Or this
the one below it?
This one?
Yeah, that one.
That see, it didn't break. See triple bottom. It came here, touched this bottom, went up, touched here, came back again, touched the consolidation, right? Touched here again, touched, but it didn't break.
But you don't know at that time, when it still has only one V, you don't know whether it's going to do the third one, the second one.
That's why you have to wait for it to break.
That's why you have to wait to break out. If it doesn't break out, that means
wait for it to break. When it breaks, you enter.
Okay, so after it breaks, you enter.
Yes, yeah. If it breaks, you enter. If it doesn't break, nada. Do not enter, please. Because if you enter, if I go down and do the dallying, and then when go the opposite way, and voila, you've lost money.
You're gone.
You're gone. It wipes you out. All right, so that's it. So now we'll have the double bottom, and then that's for bullish. Then we'll have the double top. Double top is bearish reversal. You have price going this way, going upward, and then it hits a certain point, and then enters into some form of consolidation, hits that top, comes down, hits this place, goes up again, does not break, hits that place and stays there, and then goes back down and hits and breaks and continues going down. That's a reversal, and you can have your entry point. See, your entry point is not exactly at the place where it's touching and touching, right? It's just below it, you understand? Because it has broken and it's going down, then you can enter. All right? Okay?
Yeah.
Yes.
Yeah.
All right.
Makes sense.
Then after that, you have ascending triangle. You know, I was talking about trigonometry in trading, right? The ascending triangle. This ascending triangle is, you know, it came up, touched here, it was just doing dilly-dallying, going up and down. And then after touching that level, it broke that level and then continued going up. Your entry point should be after it has broken that trend, you understand, or that channel, all right? You know, I wrote that we'll be talking about channel as well. We know what channel is, right? I talked about channel before, right? The channel is when price is doing up, down, whether it's doing it diagonally or it's doing it horizontally or it's doing it vertically, you understand? It's a channel, all right? Once it's going, touching a given line, you know, you're able to draw your trend lines and it stays within it, you understand? And it has not broken it. Once it breaks it, that's a reversal, that's a change. That's another way to find reversal in trading, okay? All right, so here we have the ascending triangle, and we also have the descending triangle, which is the opposite of the ascending triangle, all right? So, and then we'll have the triple bottom, which we've talked about. It's up, it's down, it's up, it's down, come up again, and then breaks and continues going up. Sometimes when it does this breaking, it can continue to high heavens, you understand? It might even give you 500 pips, 200 pips, 300 pips, you understand? There's no telling how much you can get from it, you understand? That's why it's very important to wait. Patience is very important as well in trading, all right? We also have triple top, all right? Triple top comes, touch, breaks, and continues going down, all right? Here you set your take profit. And when you're setting your take profit, make sure you look at the next key level closer to that point and set your TP, you understand? That's being careful. You collect your TP1. It could be 10, it could be 20, it could be 50. But trust me, it will not stop halfway and go back up. Except there's another key level. That's why you have to look at key levels on 1 hour and 4 hours, you understand? Okay? So you know where they are and set it at the lowest minimal point. So you collect your profit. And if you're taking multiple trades, you're the first one you take out, you set your TP1, second one, set your TP2, third one, set your TP3, so on and so forth, right? That is, you're using proper risk management and you have enough money in your account, you can do that, all right? That way, if they hit if all of them hit TP, or even if it's only TP1, you understand? But you're all in profit and you see the team reversing, you can take your TP1 and close the rest in profits. Am I correct?
Yes.
So all these.
Another thing we need to learn is, you know, this trailing stop loss, how you can now be moving your stop loss to follow.
Very good. That one is not difficult. You see, that one, you don't even need key levels, all right? The reason why you move your stop loss is so that you can secure profits, one. Secondly, so you do risk-free trading. And then thirdly, you don't convert a winning trade to a losing one. Because you see yourself, sometimes you're in a trade and then you are like $20 up. And then you're still waiting to cash in on $100, you understand? And all of a sudden, it reverses, and then you see it hitting down -100. And it's refusing to go back up again, you understand? So that's the essence of moving your stop loss. For me, I do not move my stop loss. You know what I do? I look at the trade, and the trade is giving me plus $100, $200, $1,000, whatever. All right. and all of a sudden, I see a reversal pattern, I'm out.
You don't even bother.
No campaigning, no discussion. I just collect my money and I leave it and I wait for that reversal to happen. And once the reversal is confirmed, I do the opposite trade. You understand? But if maybe it does something like this and then continues up, nothing stops me from jumping on again here. You understand? Number one, I've secured profits. Number two, the trade I'm putting next, I'm trading with my profit, all right? And then it will still head to profit and I'll collect more profits. And if again it starts dilly-dallying and doing as if it doesn't know where it's going, I collect my money and wait again. You understand? You see, when you do that, because you see, sometimes, I've seen lots of trades, you understand, where people are, they are in profit, all right? They say, okay, move stop loss to break even. You understand? You know what that means, right? That means, who can tell me what it means?
Move your stop
When you
loss
stop loss to your entry price.
Exactly. Move your stop loss to your entry price. That means the price you entered in, you make it your stop loss. That means you're doing risk-free trading.
Well, that's only if you have to be in profit already to be able to do that.
Yes. No, because that's what I was saying. Like you're in profit. You touch your stop loss when you see that you're already in profit, and you actually want to shift it upward so that at least you mitigate loss, or you don't take the hit again. All right. But why do that? Why would I do that? I'll just collect my
that process. You can equally close your
exactly. I've seen the thing going up and I'm watching the thing. Even if I'm not watching it, you understand? I don't want to watch it. I see it. It has, my target was, let's say $100, but it's giving me $70, $80. I will collect it. I won't even want to wait for it to reverse to $20 before going back up again to 120. Guess what? I'll wait for it to go down again, so I will enter and the profit I will make will be more. Do you understand what I'm saying? Let me explain. This one I'll put out in the group so we can see it there. All right. So let's say, for instance, now I'm on this trade, right? Okay. Let's say I'm somewhere around here. Okay. I entered here, and the price moved, got to this point. All right. And I sense this reversal coming. What do I do? What did I say I would do? I will jump out. And when I jump out, price start doing like this and doing like this, and then goes down this way, and then start showing signs of going up. I'll jump back on again. And when I jump back on, see what I've done. I've reading from here to here. All right, and I've collected 42 pips about. All right, 42 pips. And then I jump out, and it goes back down and gets to this place. And guess what? And I'll jump back on here again. All right, and then right up to this place. That's another 27 pips, right? 27 plus 42, let's say 43. All right, 43, 27, 50, 50 plus 20, 70 pips, right? 70 pips. But if I stay in the trade, all right, and I just stay from here to this point, I've gotten only 48 pips. Who is wiser? Me or the person that held on and wanted to ride it out to the end?
It's you.
Exactly. You understand? So I'm like, exactly. I've done on the same signal, on the same trade, I've made double profit, almost twice what this person would have made. All right. So that's why I don't say, oh, move stop loss, so that if the thing comes, okay, let's say for instance, now I set my stop loss here at this point. I don't say, oh, okay, now I'm in profit. I'm somewhere up here. Move stop loss to break even. Doesn't make any sense. Close the thing out, wait for the next entry, jump on board, let it ride it up and collect profits. Or if you want to be a typical wise man, right? You see the reversal coming, you wait and you confirm the reversal, you jump on, catch for that what pips from here to here. All right, that's another 16 pips. Added to that one, you're almost hitting 100 pips, right? That is 70. That's 86, 87 pips, right? And that's more than double what this person would have made by just doing only one movement. All right, so there you have it. Okay, so that's how you use support and resistance to set your take profit and your stop loss. All right, let's say for instance I'm entering, let's say I'm somewhere around here, and I'm going to do this trade, right? You know, I've seen everything that's been happening, and it's a bearish movement, right? Where will I set my TP1? All right, I'll look at the next available key level. All right, and in this case, the key level that I'm seeing as obvious is here. Are you seeing it? Here, this point. And if I trace it, is at this point. That means I will set it at
0.96790.
Exactly. That's my TP1. Where will I set my stop loss? Because it's going to go down, like I said, I'll look for the next the key level that was higher than this. All right. If there was none higher than this, the better. That means it hit its peak. That way I can even set, let's say 20 pips stop loss or whatever, you understand? Because it did its best and it has lost the momentum and it's going back down, and it's confirmed that it's going back down. All right. Then I'll do it that way. So, but let me see if I can see other key levels that actually touch there. Yeah, there is. All right. So the next one is somewhere around here. All right. I'll set my stop loss, not just exactly there, but I will take it a little bit higher to maybe this point. At
Like 2 ratio.
Say?
Like in 2 ratio.
Yeah, 1:1, of course, is the worst case scenario. All right. Either 1:1, or you make it I don't know, 1:2. But I don't ever put my risk to be higher than my target, right? I cannot be targeting 10 naira or $10 or 10 euro, and I go ahead and I risk $100, €100, 100 naira. It doesn't make any sense for me. That's me. Don't be like me. Be like yourself. But of course, you can make a decision for yourself and know what you want to do.
And that's what we've been doing with Peter's strategy.
Exactly, and that's the reason why when see it's good enough. You take 10 trades, and you know how difficult it is to take 10 trades and hit take profit on 10 pips, right? And you lose only one. Now you've only made half of what you made. All right. So if you took let's say 8 trades, or let's say if you take 5 trades and you lose 1, you are on 0. If you take 5 trades and you win 3 and lose 2, you are in big minus. Do you understand? Take 5 trades,
your loss is higher than your profit.
Yes. If you take 5 trades and you win 4 and lose 1, that win ratio is 80%. That is 4-1. But guess what? You're on minus because you won 40 pips and you lost 50 pips. You are running a deficit of 10 pips. You know, to me, well, doesn't make too much trading sense for me anyway. But yeah. That's me. That's Emmanuel. Emmanuel can be a left-handed monkey sometimes. So, but that's Emmanuel. You know. So, but the thing is this: if you really want to do this and do proper risk management, understand, it's not always advisable for you to expose yourself 5 times more than what you're targeting. You understand?
Because one loss on that strategy can wipe out 5
exactly.
wins.
Yeah.
5 gains, understand? And you know how it is to win 10 gains and do only 2 losses, and your whole day, the whole stress. You know when you're trading how your heart is pounding. You know.
That's why he said you should not wait until he hits profit. When you see that it's moving to satisfaction, you can close it.
Exactly. But when he hits stop loss, most of the
Yeah.
time, you're still hoping.
You end up having $1, one something, 1 point something too for the whole day. How many hours?
Yeah, and even like that, you might still end up, you might even end up coming short. All right. Okay, good people. This has been very nice. All right. And I think we should do it more often so we can rub minds together, learn more about trading, and become more profitable traders. All right. A lot of good things are coming. I trust.
Amen.
Lots and lot of goodies are coming, and we'll all receive them in Jesus' name.
Amen. Hallelujah.
Just one quick question before we go.
God bless us all. All right.
Hold on, Emmanuel.
Bennett is asking.
Just one quick question.
Yeah.
On your chart, Scott, the ADX and DDI was
on my chart, right? This one.
Yeah, ADX and DI.
That's the full name. ADX is you know what ADX means, right?
When I click on my indicator ADX, all I get is the one line.
Oh, well, on your MetaTrader 4?
No, on Trading View.
Oh, that is because you're choosing.
You need
ADX.
to search for.
When you're, on that day, I took ADX. I said when you want to get the right ADX, choose ADX and DI, ADX and directional index. ADX is this one, right?
Right. Okay.
And then the directional index is the D plus D minus.
Right.
Me, I could not get the same figure.
Or the same figure. I think. Let me see the configuration here.
ADI, ADX plus ADI.
So you see, we'll have inputs 14, length 18, and then TH20, and then the style. We'll have D plus, of course, is green. D minus is
green.
DX is
red. DX, okay.
20 can change to 25 if you want, and yeah, that's it.
And then, sorry, that's EMA. My own EMA has 4 lines. I don't know how to change it to the one with 3 lines.
Your EMA
it has 20, 100, 50, and 200.
Remove the one you want to remove now. Click on the click on the line. You click on the line. Okay. You click on remove.
Okay.
Yeah, it will go off.
You have to
remove the right one.
The one we have here is 20, 50, and 200.
200, yes. We'll have 20, 50, 200.
I'll remove the 100.
Yeah, remove the 100. The 100, what does the 100 even say, sir? Well, I don't ever use the 100.
Okay.
All right.
So there's ADX lecture with Jeff on WOW.
Okay.
You know, my problem with this WOW is I only seem to find the live trades. Do they have separate lectures from the live trades, or is it in the live trades that they lecture all these things?
I think it's what
is in the live sessions, live training, not live trades. They have live trainings, just like in Epic, right?
Yeah.
So when you miss it, it's recorded and saved on WOW. You can go there and watch it, right? But I will do my best to send the video that we did when we're doing our own ADX. I'll find it, I promise. I'll find it and put it on our chat so we can see them as well, all right? And watch them again, because that one is about 1 hour. Even the back testing that we did was there as well. So you see how the back testing, how the reasoning, during the trade, how we reason and how you use it and how you apply it and all that. Okay.
Yeah.
All right then.
All right. So thank you guys for coming, and God bless us all.
Thank you for your time. Thank you, Esther, for the presentation, and thank you, everyone.
Thank you too.
Bye.